Raiz is a popular micro-investing app, but a common question is how taxes on profits are handled. It's an important aspect of managing your investments, so let's clarify the process. The short answer is no. Raiz does not automatically deduct and remit all your final taxes on profits for your regular investment account. Raiz invests in exchange-traded funds, ETFs, and other assets on your behalf, and these investments generate different types of income, such as interest, dividends, and capital gains. Raiz's role is to provide you with an annual tax statement. This detailed statement, usually available around the third week of July each year in Australia, outlines all the necessary information about the income and capital gains that your investments have generated throughout the financial year. It's your responsibility as the investor to use the figures from this statement to complete your individual tax return with the relevant tax authority. You must include distributions, interest, and any capital gains or losses from selling your units in your portfolio. This information is typically entered under sections like interest, dividends, and managed fund distributions in your tax return. There can be some tax withholding, such as TFN withholding amounts on unfranked dividends or interest, if you have not provided your tax file number, TFN. This is a tax amount that is withheld by the investment body and credited against your tax payable. However, this is not the final, complete tax on your overall investment profit. For the most accurate and personalized advice, especially concerning capital gains and available discounts, you should always consult a registered tax professional. They can ensure you claim all eligible deductions and correctly report your investment income. Understanding this process is key to smart investing.